I never thought we would see demand like this moving forward. Hello, I'm Justin McKinney with Comstock Investments. As we wrap up August and we look forward to September, we look back at what the growing season amounted to, those beans that are always famously finished out in August, and the corn crop, which looked to be monstrous at the end of July. And we continue to see rainfall. However, has started to show some holes. Those holes being the much documented southern rust and tar spot in some areas. So we look at the August numbers at 188. We look at last year's total production at 179 and change. And where do we end up this year? It's fun to dream about if we don't grow a bushel, we lose that bushel off of the carryout. However, it's closer to half a bushel, maybe 3/4 of a bushel at these prices. But the key will be what the harvested acres end up being, as these feeder cattle have been astronomically high, and we continue to hear reports of several clients not cutting as much silage and therefore putting more grain into their bins or onto the market. So as we move forward here, let's look at the export sales that were released this morning. We had net cancellations on the corn, not a huge surprise. It's just one of those things that happens yearly, but we're still on pace to exceed the USDA's 2.8 billion bushel projection. Commitments right now are at 2.77. That's up 26% year over year. The shining star, obviously, and what we all look forward to, because we have this big crop coming, is the new crop export sales, which were 82.3 million bushels, leaving us a total of 739 million bushels on the books. That's the second highest ever for late August. These are very important sales to continue to get, but at least puts enough of a pause to keep the beating off of the market for now, and the funds from piling on and continuing to sell this thing lower. The top buyers on the 25-26 crop year ended up being Mexico, unknown, and Colombia. Well, also on the other side of the equation is the ethanol report that came out yesterday. We ended up with 315 million gallons for the week, nearly unchanged from the week before, and it matches the expectations. The 4-week average sits at just 2.2% above year-ago levels. At this current pace, we may finish slightly behind the USDA's projection, somewhere in the 20 million bushel range. Again, not a huge deal. We're still waiting that pending official grain crushings data. So once we get that, we'll have a little bit better feel. But it looks like we're going to miss that just slightly. Ethanol stocks ended up, a larger decline than expected. Now 4.3% below year-ago levels. This marks the largest year-over-year shortfall in 87 weeks after stocks have run nearly at records most of the year. The implied offtake of that, with the 4-week average at a little over 8 million barrels per week, that's up 6% from last year. So ethanol margins have come back a little bit here. We should see maybe that pick up, especially as we get into that new crop corn. And as the basis weakens a little bit, we may see a little bit more margin come into that and see those plants run a little bit harder. Time will tell, but history would tell us that is likely. And following that is the gasoline demand. We rebounded to 9-week highs at 9.24 million barrels, still about 0.7% below last year, but the 4-week average now sits at about 9 million barrels per day. That's down about 1.1% year over year. So as we move forward into the Labor Day weekend, we'll see what traffic looks like. We'll see how many miles come out. Maybe that is a little bit of an uptick. We have seen gas prices come down. How big are the road trips people take as we finish out the summer and move into school? Unknown. Myself, I am actually planning a little bit of a road trip. So I enjoy the lower prices, but we'll see if we can get that demand increasing as we move into next week's report. Overall, on the export side of the ethanol, they remain very strong, averaging 139,000 barrels per day over the last 3 weeks versus 99,000 barrels per day last year. Over 8 weeks, the exports averaged on ethanol 126,000 barrels per day versus 109. So you look at the 3-week, we look at the 8-week, both of those increased year over year. Now, where that ethanol is going, it doesn't really matter as long as we're shipping it out of here. But the takeaway is the export demand in the ethanol has been very good despite gasoline demand in the United States being off. So helping offset that, we need to continue to move that out, and we'll see how the rest of the year plays out. But it is a good sign for at least now. Soybean demand, net cancellations, mostly those were rolled to new crop. Commitments ended up for the 24-25 year, ended up at 1.86. We still have a week to go, but at 1.869, that's 11.6% year over year, on track to meet the USDA's target. Maybe exceed it, but likely just meet it. Still a very good year for our soybeans, especially the lack of late season buying, late season shipments. We saw from China. We saw some other countries step up and buy some beans. Very good sign. So we move forward to the new crop exports. They came in at 50.4 million bushels. That's above expectations. Still very weak. Total export sales at 266 million bushels. That's the second lowest in 18 years. China's still absent. As mentioned earlier, they are having their discussions in Washington. What we end up with the trade deal, personally, we're already cheaper than South America right now. We're not getting those sales. We need to see some other countries step up and continue to buy some soybeans. We need to get those beans out of here. We need to get them gone. We have a big crop coming. We can debate crop size with sudden death and white mold coming into these beans. But at the end of the day, we need to see some export sales, and China's not there. Our top buyers are unknown, Mexico and Taiwan. How that plays out, we'll end up seeing. But maybe China does come in and buy some beans. I personally don't think we see that till November, December. And likely it'll be just filling in holes for Brazil that they can't execute on. Moving on to the wheat. We continue to try to find a bottom on this wheat market. Overall, Russia continues to increase their crop size. We can debate that all we want. But export sales from the United States continue to run very good, 21.3 million bushels this week. That gives us a total sales of 445 million bushels. That's up 23% year over year. That's a big deal. We have world stocks slipping down to levels where we should not see wheat continue to slip, yet the funds continue to sell it down. At some point, I would guess that ends up being a storyline, the world stocks overall versus the price. However, today it's not. Top buyers on that included Nigeria, Mexico, Taiwan, and Vietnam. Overall, if we could get some sort of rally in the wheat, we could possibly pull corn with it, but we still have those numbers circulating of the 188. I don't know that anybody believes that anymore, but it will be a record crop. And unless we get some shocking news when the combines start to roll, due to this southern rust, due to this tar spot, it looks like we're going to have another record production, and the funds just lack enthusiasm to come in and get long corn at this point in time. They have covered some of their shorts. We'll see how the rest of the week ends up and how the commitment of traders comes out on Friday. But we do move into a 3-day weekend. I don't expect a heck of a lot tomorrow. Moving over to the livestock side of the world, beef. Everybody's talked about beef. I can't log onto my computer, not read a story about beef. It's truly amazing how resilient the beef market has been on these higher prices. Not only domestically, which we did have reports out that the demand is still holding in domestically. We have $8, $9, $10 hamburger, depending on where you're at in location. But generally speaking, I never thought we would see demand like this moving forward. But also, net export sales came in at 13,600 metric ton today. Amazing. 34% week over week higher. 40% above the 4-week average. We should not be selling this beef at these prices. Shipments, 11,500 metric ton. That's up 4%. It's down 6% over the 4-week average, but we sold it, so at some point we'll probably ship it. Top buyers included Japan, South Korea, Hong Kong, Mexico, and Taiwan. These people continue to come to America to buy beef, which I don't know what to say on the feeder cattle or the fat cattle side of things, other than this demand looks pretty bulletproof until it doesn't. And that's a scary point. When does the black swan hit? The cattle market has been notorious for finding black swans. So as we move forward, be cautious when we're placing these cattle in and see if we can lock up some margin, either with some put options or LRP or however you want to do that. But it will be vital because these are very lofty prices. And if we do see some of that demand go away, it could be very concerning for the beef market. Let's talk about pork for a second here. I have talked in depth about this, about those bellies. We got our cold storage numbers. Joe went over that yesterday. I think it's important to look at that. We saw week over week. I think it's important to look at those numbers as we saw month over month and year over year declines in those belly stocks. So We look at the pork sales. The export sales came in at 42,400 metric ton, sharply higher. That is also 53% higher than the 4-week average. We need to I thought we would push those bellies to 200 in August. We tried, we could not get there. We continue to find the bottom on those bellies and see the market swing in, pick those bellies up on any breaks, and support this market. It looks like we made a little bit of a breakout on the charts. How long this can run remains to be seen. Caution is warranted. However, we look at the imports, Canadian hogs. We've had a lot of people talk about disease this year, numbers being down. The recent Canadian numbers came out at about 1.22 million head, virtually unchanged for the breeding sow herd year over year. They expect a modest increase in the next 6 months as lower U.S. feed costs, better margins, all those things that we see the hog market quickly react to. So we do expect those to maybe pick up a little bit. Total pig crop in Canada estimated at 15.1 million head. That's up about 1.4% year over year, despite a smaller breeding herd. So again, we battle those numbers in the United States, pigs per litter and sows and things like that. So they're also gaining productivity. They're pushing their pig crop to 12.5, the highest in 20 plus years. And we look at the imports. The imports coming into the United States of about 3.44 million head. That's down about 1%. So we're pushing those pigs per litter up in Canada, imports off a little bit. We would expect that to kind of balance out as we move forward, third, fourth quarter, something like that. But when overall you look at the big picture, Canada accounts for about 5% of the slaughter in the United States in 2024 for hogs. So did we lose 5% due to disease this year? That seems like a lofty number, especially when you look at kills right now. We're running very close to week over week, year over year, things like that. So the outlook for the hog market looks very strong, robust feeder pig pricing, improved productivity. Overall, the outlook for the hogs at this point in time looks very good. We need to watch those bellies. If they would happen to break down, that would be a cause for me to be a little bit concerned about this. But as I talk, we now have June hogs up over $100. Yes, I realize we generally don't want to sell June hogs this early in the year, but keep an eye on that. If we get to somewhere in your 108, 110 or better than that, we can take a look at some put options or LRP if you're not ready to finalize the price. But with cheaper feed costs, we have the soybean meal that's down this year. Corn looks to be somewhat stable, if not down a little bit. If those numbers end up working for your operation, give us a call and see what we can do to help manage that risk. This is Justin McKinney with Comstock Investment.
Futures trading involves risk. The risk of loss in trading futures and/or options is substantial, and each investor and/or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.